Hello, everyone. This is Andrew Berman from NMP. Thank you for joining us for another NMP webinar. Super excited to come to you on this amazing Thursday. Hopefully it's amazing. I know it's rough out there, man. It is ugly. I talked to a lot of people that really having a hard time out there, but I'm also talking to people that are having a lot of success. And one of the things that they're doing actually to have success is working with self-employed borrowers. So obviously we got the leading lender for self-employed has been doing this for a long time, who we've partnered with for a long time to help educate you, the brokers, about non-QM and working more with self-employed borrowers. Of course, construction has to start right now. Pardon the noise, but we are going to be doing close more loans for self-employed borrowers. I got Scott with me. Scott, you there?
I'm here.
All right. And I am all angel oaked out here. So by the way, this is actually the shirt that you get to win today. So we've got 3 shirts that we're going to be giving away. You don't get one of these fancy Angel Oak shirts, but you're going to get actually one of these Always Hustle shirts. So the first 2 questions are going to actually win a shirt. And then also we're going to actually give one to the best question. So first 2 questions are gonna actually get these awesome Always Hustle shirt. Someone from Scott's team will reach out to you, get your address. But listen, before we get started, if you don't mind, I'm doing this right now. Take your phone out, turn it to silent, turn the ringer off. You know actually how we roll. We will be out of this in less than an hour. I promise you we'll be a good steward of your time. We'll make sure actually we give you lots of information. And also, just shut down everything. Shut down actually any kind of browser tabs that you have open. Shut down anything actually that might distract you. Encompass, Calyx, whatever you have open, shut it down. I promise you, we are going to give you a lot of information. But this information does get kind of absorbed better if you find how this applies to you. So I suggest you ask questions. And I'm also going to suggest that you take out a piece of paper and write down the number 521. So just take out a piece of paper, or if you're like me, you're going to open up a pad on your screen and write down 54321. 54321. And by the end of this call, you're going to fill up those 5 spaces with people who you could potentially call. Because I've done these webinars before, and generally speaking, especially when we're dealing with Angel, they usually are inspiring the attendees to find deals by the end of this call. So do that, write that 1 to 5. And listen, by a show of hands, I'm curious how many people have already actually done this. I've already taken out a pen and paper, open up a document, and have written 5 to 1. And we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Beautiful. We are going to create some business with self-employed borrowers. And Scott, whenever you're ready, take it away, buddy.
I'm ready. So how are you, everybody? My name is Scott Gruebele. I'm an account executive here with Angel Oak, primarily based down in the South Florida market. And as Andrew said, thank you for the introduction, Andrew, and thank you for having us today. It's an honor to be able to come on here and be able to talk about what lenders like us offer to close more loans for self-employed borrowers. We know it's a little bit of an underserved community for a lot of different reasons, which we'll get into. But that's really what we wanted to go over here. So I'll get this kicked off here, kind of going over a little bit of a snapshot of who we are. Angel Oak Mortgage Solutions we're a vertically integrated lender. So really our affiliated asset manager is the one that purchases all of our loans, which is hugely beneficial to our clients. To give you an idea of how long we've been doing this and the size that we are as a lender, we've been the market leader since 2013. We were one of a handful of companies that kind of reintroduced the non-QM space into the lending industry. Securitization wise, we've done about 34 non-QM securitizations since we came back in 2013, totaling about 12.4 billion. And we do that, as we said, vertically integrated through our own asset company. All of our securitizations are AAA rated securitizations, which is big. They're very well performing in the secondary market. And from a volume standpoint, we have been the largest originator of non-QM volume. For 2021, for example, a great year across the board for the industry, was a record year for us as well at 3.9 billion. So just a little idea of who we are here at Angel Oak. Got a poll popped up. So poll time for those t-shirts.
All right, and here we go. Okay, I'm going to launch the poll. It's going to be our first poll. We're curious about how many people. Hold on, let's get this going. Hit the button, and here we go. Launch the poll. All right, so want to know if you've closed the bank statement loan. So please let us know by show of votes here. Have you closed the bank statements loan? So please let me know actually if you've closed the bank statements loan. Just let us know right here. We already have 60% of the room has already voted. So by the way, Scott, you have a guess actually of what percentage of the room you think actually has closed a bank statement loan?
Well, just from, and I love this question, I love this poll, it always kind of blows me away, but I guess just from past experience, cheating a little bit here from other webinars I've done, I would say the majority have not closed a bank statement loan. Let's say 65% have not.
Okay.
Am I accurate?
Let's see. I'm going to share the results right now. Here we go. We have 76% of the room has voted. 59% have not.
Okay, I was close.
So keep in mind, Scott, the NMP reader is a little savvier than the average mortgage professional out there. So, we embrace good ideas, generally speaking, before our competitors do. So hats off to everyone for embracing the bank statement programs. But one of the things I do find is that it could never have a shortage of information about this. I would love to know actually if anyone has had either like a negative experience or they have some other reason that stopped them from doing more bank statement loans, please let us know in the question boxes and just share your feedback in that. We just love to see. But we are going to actually go through these questions. We're going to answer them live as these questions are coming in. Scott, hope you don't mind me doing that, but
Not at all.
we're going to do whatever we can to try to get to your questions like as they're coming in. And if it's not related exactly to what's on the slide, we might save a bunch for the end. But please, as my grandfather used to say, the only dumb question is the one you didn't ask.
Yep. All right. So we'll keep this moving here, discussing the bank statement program. So the bank statement program, Andrew, as we all know, it really was a program designed for the self-employed borrower. Because obviously self-employed borrowers have complicated tax returns and they write off a lot on their tax returns, business and personal. Same thing for a 1099 individual, even a Schedule C or sole prop. So the bank statement program was really a way to be able to qualify and give more options and solutions to a self-employed borrower based on the cash flow that they are generating through their business. And there's a number of ways that we can do that. We're in essence increasing their purchasing power because the tax returns are not going to be sufficient income to qualify them. And we're doing that by taking a look at their bank statements, where we're going to review and analyze and calculate the income for you up front. We're basically looking at the deposits. If the borrower is a business owner, on the business, if the borrower is a 1099, on the personal bank statements. And we're going to come up with an income calculation based on the deposits that are being generated in that account. That's what we're going to use to qualify the borrower. So it adds a lot of value for a self-employed borrower because we might look at their tax returns and say, okay, based on the income, shown on the tax returns, your buying power is going to get you into, say, a $500,000 valued home, where we can then take a look at the bank statements, run the income calculation there, and know exactly what income we have to work with right up front and say, wait a second, with your bank statement income, we can almost double your buying power and you can go out there and afford a $900,000 home. So you can see how that can be really beneficial to a self-employed borrower. Couple other notes here. Some of the programs allow less than 7 years out of foreclosure, short sale, or bankruptcy. So for example, with us, we only require 24-month seasoning, 2-year seasoning on any of those events. And best of all is sometimes, Andrew, there can be a misconception that these programs might be difficult to close. I like to, obviously I'm a little biased, right? But I like to make an argument that I think bank statement programs are easier to close than a full doc program for a self-employed borrower. And let me explain why. So when we're looking at a bank statement loan, we're calculating the income on the bank statements for the borrower at the pre-approval stage, right up front. When we run that income calculation for you, that's an official income number that we can send the borrower out shopping with. And it's the same income number we're going to use when that loan gets submitted to underwriting. So the underwriting process is much easier for the underwriter. Other than that, all we're doing as compared to a standard conventional loan is we're replacing the tax returns with a set of bank statements. As we all know, tax returns for self-employed borrowers can be really difficult to calculate income on. You know the old joke, you can send it to 3 different underwriters and get 3 different income numbers. So, bank statements, it's right up front, it flies right through the system, and we close these loans quickly and easily, well inside of 30 days. And if you have a responsive borrower and an appraisal that gets done in time, I've closed these in 2 weeks or less. So,
Scott, I hope you don't mind me adding some commentary on this because I do a lot of these webinars. I see actually the problems that when people think that they're difficult or they're hard to do. Generally speaking, they haven't worked with like a non-QM lender. Obviously, there are others besides Angel Oak, but you guys have been doing it, for the longest and I know the biggest, and have like all the resources behind it. But when you work with a company that's dedicated to doing non-QM the way Angel Oak is, you get a lot of less bumps. Things go a lot smoother, a lot more predictable. Plus, at some point, I'm hoping you can show. Actually, we'll find a way to talk about that quick qualifier thing. That's Absolutely. Such a cool thing. We'll find someone. I'm sure before the end of this, someone will ask about pricing, and that's when we'll go to this.
And we can hop right in there. All right.
Yeah,
so, continuing with the theme here is the different options available to the self-employed market. So this market is a very lucrative market. And obviously in the market we're in today, real estate, mortgage wise, the self-employed borrower, I think, is going to help lead the way, so to speak. We have to look at it kind of from a high level view is, your self-employed borrowers are usually the borrowers that are earning the high level incomes. They're usually the borrowers buying the jumbo type properties. It's not often you're going to find a W-2 borrower that's making 300 grand W-2, right? But self-employed borrowers, we know that they're generating that type of income through their businesses. And so, we really wanted to serve that underserved market with a lot of different options. So currently, there's about 59 million people self-employed, including gig workers in the United States. Down here in Florida, where I'm located, we actually led the nation the last 2 years in a row for new business starts. But those numbers are exploding all across the country. So that represents a significant number of potential borrowers who might need either a bank statement program or a 1099 option. Let's talk about that since we have that up on the slide. So for self-employed borrowers, the bank statement program is obviously one option. But if you're a 1099 individual, it opens up another door to you because you can qualify using your personal bank statements if you choose to, or we can look at just your 1099. So I like to use realtors as an example here, Andrew, because I probably close, 4 or 5 of them a month at least, where they utilize this program where we're looking at just last year's 1099, or we can look at the last 2 years 1099 if they had 2 really good years in a row. Very similar to 12 months bank statements versus 24 months bank statements. It gives the borrower a lot of leverage because, especially for a realtor, let's say they did really well in the most recent 12 months. We can just look at last year's 2021's 1099 and qualify them based on the income showing on that 1099. The one thing we also see, and getting back to your point earlier about, people that might have the misconception that these are difficult loans, is these borrowers have excellent credit, large down payments, and as I mentioned, they're usually buying the higher priced homes. The only obstacle they have is they're not showing that income on the return. So I'm very interested in the numbers that we put out on a monthly basis to show what our average borrower looks like. We put them out per program, and the most recent ones I saw for our average bank statement borrower, average credit score is about a 720. Average LTV is actually coming in at about 78%. It's just under 80%. And the average loan amount is up in the 500,000 range. So it just goes to show you, these are borrowers with excellent credit. They have money to put down. They're able to afford these higher priced properties. They just don't show all the income on the returns. That's all. But by offering these programs and understanding how they work, you can really stand out by being an advocate for this underserved market.
So Scott, speaking of understanding, we got Sarita Williams, who she definitely understands this. So Sarita wants to know, with your bank statements product, do you have a 12-month and a 24-month program?
We sure do. Yep, we have the option for 12 or 24 months. The pricing is actually the same for both of those. And again, it gives you that flexibility to be able to look at either the last 12 months, if those were better, or the full picture of the 24, if those were better.
Fantastic. All right. So Sarita, you win the first Always Hustle shirt.
Yeah.
And I got a couple of people that are raising hands. So if you want, just use the question box rather than just raising hand. And this is a question. I'm just gonna. It's not specifically about this, but Eddie wants to know. So I'm a new broker. What are the requirements to partner with Angel Oak?
Oh, very simple. So you would reach out to one of your local account executives, which can be found right on our website. We'll go ahead and send you out a broker package, get you all the information you need to complete to send in the package for approval, and we can usually get you approved within 24 to 48 hours. Obviously, a lot of our accounts are usually newer businesses, so there's no worry there as well.
Fantastic. Beautiful.
All
Thank
right.
you for your participation, Eddie, and keep those questions coming.
Cool. So we'll keep it moving here. Go into a little bit more of a dive of the highlights of the bank statement program. So this program goes up to a $3 million loan amount. The minimum is 150, which I think is very fair, but it actually goes up to 3 million. So obviously on the non-QM side, we don't have a standard in jumbo, conforming in jumbo. All of our programs really go up to jumbo loan amounts. As Serena's question is, answer Serena's question here, 12 or 24 months business or personal bank statement option is available. I mentioned earlier, we only have a 2-year seasoning requirement for a foreclosure, for a short sale, bankruptcy, deed in lieu, etc. Just like you would on any conventional program, there is a minimum requirement that the borrower has to be self-employed for 2 years. So if we're using a business bank statement to qualify, for example, we want to see that that business has been open for 2 years. But if the borrower is 1099 or Schedule C, they can have moved between employers as long as they've been self-employed, filing as a 1099 or a Schedule C for the last 2 years. If we are using the business bank statements, your borrower can own as little as 50% of the business. So that's another misconception. A lot of times people think they need to own 100% of the business to be able to use that business account to qualify, and that's not the case. You can own as little as 50%. On the personal bank statement side, you need to own as little as 25% of the business. So the question we get asked a lot there, Andrew, is, oh, well, what if my borrower owns 35% of the business? We can still do a bank statement loan for them. We're just going to pivot to the personal bank statements.
Okay.
Purchase, cash out, rate and term, of course. We can do all of the above: primary residence, second home, investment properties. We mentioned the 1099 option available to those types of borrowers, again, using the realtor as the example. But this program, as well as most of our programs, also offers a 40-year fixed interest-only option. So I really think in this market, Andrew, I really think this is extremely underutilized because, obviously there's a lot of payment sensitivity. We're hearing in today's market the term of, marry the house, date the rate, so to speak. Mm-hmm. The point is that we all know as professionals in this industry that the rate is temporary, but it should not stop you from purchasing the home of your dreams or a really good investment property if you're an investor. And so the interest-only program helps people to get into the property at a much lower payment today, and they can worry about doing that refinance down the road. So the way that program works is it's a 40-year loan. The first 10 years are going to be interest-only payments. And then after those 10 years, it converts to a standard amortized 30-year fixed. The cool thing about it is that it maintains the same interest rate for the entire 40 years. So that the rate you lock up front is the same rate you're going to keep when it converts to the standard 30-year amortization if you still have the property at that time. So it's a great feature, I think, to offer. And then just to add a little another note there is during that 10-year interest only payment, the borrower can still pay down their principal if they choose, right? That's not a problem. There's no prepay unless it's an investment property. And what happens is the monthly payment, the minimum interest only payment will actually recast on a monthly basis if you hit that principal down a little bit. I think that's a really cool feature. Last but not least, non-warrantable condos are acceptable. So lenders like us, for the most part, are all accepting non-warrantable condos. In my market here in South Florida, everybody has heard of what happened in Surfside. That pretty much required Fannie Freddie to change up their entire requirements for the condo market. And a lot of the requirements that Fannie Freddie are asking for in terms of inspections and so on, we don't require. So we have picked up a lot of that condo business coming over to the private sector to lenders like us.
Two more questions just came in. By the way, I forgot, we got to acknowledge, so we have Eddie won the second T-shirt. So now the remaining T-shirt is for best questions. And we got some good ones that are coming in here. So we got a good question from Eli. Eli wants to know, can we finance a loan for a new business that's been around for under 2 years?
Well, the short answer would be no, unfortunately not. But we would want to take a look at the big picture of that. So we wouldn't be able to use the business bank statements for that business, right? In order to use the business bank statements, that business itself needs to be open for 2 years. But there are some exceptions, Andrew, and you've probably heard it said whenever we present is at least 30% of our loans have exceptions on them. So I'll give you an example of something where we might be able to do that is a lot of times you'll have a small business owner that is some sort of a service provider, let's say, and they may have been operating for more than 2 years, just not incorporated. They were filing sole prop or Schedule C. And then maybe per the advice of their CPA or attorney or whatever the case may be, they just recently incorporated. Well, we can see that borrower has been self-employed for 2 years, and we can see that their sources of income is consistent for the 2 years from the personal to the business account. And in that case, that's a situation where make an exception.
Fantastic. So just a couple of people asking for the slides. And if you want the slides, you're just going to have to email Scott or someone from actually Scott's team and ask him for it. And next question, let's see, we have Joe's asking, how much does the borrower need for reserves? Thanks, Joe.
Great question. It's 6 months of reserves required for the bank statement program. And that's only on the subject property. So if the borrower owns any other properties, we're not concerned with those, just the subject property.
Fantastic. All right, continue with the slides.
Awesome. So now let's talk about investment properties. Okay, so this is a great solution for self-employed borrowers that are purchasing investment properties or who may be experienced investors. Some self-employed borrowers, that's all they do is purchase investment properties, manage investment properties, etc. So the investor cash flow program, as we like to call it, it's also obviously known in the industry as the DSCR, the debt service ratio program. This program allows a self-employed borrower to purchase an investment property without having to verify any income, any employment. We don't look at DTI ratio. So this is really good for your self-employed borrower that, like I said, is experienced. Maybe they own, 5, 6, 7, 10 properties already. We know those tax returns are going to be a nightmare to calculate. And for whatever reason, maybe they don't want to go with the bank statement program. They prefer something that's low documentation. That's where this program would come into play. Couple highlights here. There is a 4-year requirement for your seasoning on your foreclosure, short sale, bankruptcy, deed in lieu. Obviously, with this program, we're not looking at income, we're not looking at employment, we're not looking at ratios, a little more risk, so we want to see a little more credit worthiness. We don't list any employment because of that on the 1003, nor do we use any personal income or any of those debts because there's no ratios either. We're going to basically qualify the debt service ratio on the calculation done exactly is we're going to use the rental income that property generates divided by the PITIA. And that's going to give us our DSCR, our debt service ratio. So we offer actually a feature where the property can actually, the rental income, I should say, for the property can actually be as much as 20% under what the PITIA is, and the borrower would still qualify. A lot of cool options there. But, you know, for self-employed borrowers, I've noticed in my experience, at least, Andrew, that a lot of the savvy investors that are gobbling up properties are usually self-employed borrowers, and this is an option that they really, really like. The other thing is we allow these loans to close in an LLC. We actually do that for all of our programs as long as it's an investment property, and so that obviously offers a lot of tax benefits and breaks to the LLC owner whenever they're able to purchase the property and take title to it in the LLC. That's another feature that unfortunately Fannie and Freddie doesn't offer. So it's another feature you can use to kind of differentiate yourself out there.
Fantastic. So we have a couple of questions that just popped in here. If you don't mind me sharing them. So we got Debbie's asking, confirming if applying for a loan on investment property, only program available is the 30 years. So I think Debbie might have misunderstood that.
Oh, so I can answer that from our standpoint. For Angel Oak standpoint, 30-year fixed is what we offer. In other words, if the question is, we don't offer any ARMs, if that's kind of what the question is pointing to. However, there are other lenders like us in the space that may offer ARMs. Angel Oak, we do 30-year fixed rate.
Yeah, fantastic. Manufactured home?
Manufactured and mobiles, unfortunately, we don't lend on, but again, other lenders in the non-QM space may. Okay,
fantastic. Good question there. So this is from America. That if that's your name, that is awesome. But so this question comes from America. Can they refinance this 40-year interest only as soon as the rates go down without penalty?
They can, as long as it's not an investment property. So yes, you can refinance out of the 40-year interest only program with no penalty at all on a primary residence or a second home. The only programs that carry prepayment penalties on the non-QM side are going to be your investment properties.
Fantastic. Awesome question. Okay, next question from Ruth. Is your program for single family residential?
Oh yeah, great question actually. Program covers single families, condos, townhouses, and multifamilies. We can actually lend up to 4-unit properties.
Fantastic. All right, next question. Is there a ratio limit? Is no ratio available? Is there a minimum FICO required?
Yeah, so from a ratio standpoint, the only program that has no ratios is the one we were just discussing, the debt service ratio, the investor cash flow. On our bank statement program, and even on a full doc program that we offer, our ratios are 40/50. So 40% on the housing on the front end, 50% on your total DTI. And what was the second part of that question, Andrew?
Is there a minimum credit score?
Oh, credit score requirements. Yeah. So currently the minimum credit score requirement today is a 680. Obviously, things have contracted a little bit. I think we'll get back to where we were just a few short months ago, where the minimum credit score was 640.
Got it. Fantastic. All right, next question. Okay, can the investor cash flow program be used for non-self-employed borrowers?
Absolutely. Yeah. So being self-employed is not a requirement for the investor cash flow program or the DSCR program. That's available to W-2 wage earners. It's available to retirees. Anybody can apply for that program as long as they meet the requirements.
Okay, fantastic. Let me, and I think actually that's it right now for all of our questions. So you want to continue on and I'll queue up the questions for you?
Absolutely. We have some more options for our self-employed community. So let's talk about the 1-year tax return program. So this is obviously going to be a full doc. And most people are familiar with this because Fannie and Freddie does offer a 1-year tax return program. But where we differ on the non-QM side is Fannie and Freddie requires you to be self-employed for 5 years to be able to do a 1-year tax return program. On our side, on the non-QM side, we only require you to be self-employed for 2 years. So we have found that this does offer a lot of options and solutions for borrowers that fall into that category, into that bucket where the business has not quite been open 5 years, but they do claim sufficient income on their tax returns to qualify, and we can go with the 1-year program. So it's 1 year seasoning for foreclosure, short sale, and deed in lieu, believe it or not, on this program. 2 year seasoning for a bankruptcy, but 1 year seasoning, obviously, for any housing event. As I mentioned earlier, all of our programs go into the jumbo territory. So we're up to 2.5 million max on this program. You can do purchase, you can do cash out, rate and term, primary, second home investment. As we just mentioned, single family, condo, townhouses, multi-unit properties all qualify here as well. Oh, sorry, I lost one. Up to 50% debt to income ratio. That's the standard DTI, as we mentioned, and the interest only option is available on this program as well. So again, just another way to offer more options to our self-employed borrowers here.
Fantastic. And just out of curiosity, because I know this always comes up, if the loan is 2.6, if it's just over what your limits are, was it something you consider?
Absolutely. As I mentioned earlier, 30% of our loans carry exceptions. So we look at them all case by case basis. We can send them up to be reviewed for the exception, look at some compensating factors. And if the loan makes sense, that's an exception that we can make. Yeah. Yeah.
Well, one of the things I've learned about you guys, like from doing these, is like we hear this over and over again. Talk to your account executive, talk to your account executive. You hear that over and over again because like your guys are just looking to make deals happen. It's truly just it's a refreshing thing to see. Actually, you're trying to figure out ways to say yes.
We're in the business of closing loans.
All right, hey, we got another question that just came in, Scott, and I'm curious about this one. Good question, Nancy. How are you handling owners who have lost a lot of their rental income due to ban on evictions, especially in Los Angeles County, where the ban was extended to the end of this year and maybe extended again? Oh my goodness! Can you give credit for what rent should be for the rental unit when the ban on eviction will end?
So I'll answer this one to the best of my ability, because obviously, I'm in the South Florida market and I really have not come across that situation. So I can't speak to it too much. But to my knowledge, unfortunately, no, we're not offering any sort of concessions or being able to use what the rent would be in those particular instances. Now, I'm assuming the question is more geared towards a loan where you're looking to use that rental income to qualify, right? What I would say is if it's somebody that's looking to purchase in that market where some of that might still be in place, you could look at the debt service ratio option, because obviously we're not going to be using any income to qualify on that program whatsoever.
Fantastic. And so that could be based on projected rents, not actual rents received.
Absolutely. So on that program, on a purchase, we're qualifying the loan off of what the 1007 rent schedule shows is the average market rent for that area. That's the number we're going to use ultimately to divide by the mortgage payment to determine what the debt service ratio is.
Fantastic. Awesome.
Mm-hmm. Cool. A couple more points I want to make here in this last bullet point down here. For this 1-year tax return program, and really for all of our full doc programs, we use the primary wage earners FICO to qualify, not the lower of the two borrowers. So that is something that differentiates us on the non-QM side from Fannie Freddie. And lastly, now that we've covered the programs, I kind of want to discuss on how they can intertwine. So the bank statement program can be combined with a W-2 wage earner borrower. So for example, 2 borrowers on the loan, one of them owns a business. We can use the business bank statements to qualify that borrower. The other borrower happens to be a straight W-2 wage earner. We can use the W-2 income from that borrower going full doc and combine the 2 incomes to qualify. And as I mentioned, we would use the primary wage earner's credit score in that case. So again, just a lot of flexibility with the products and programs for self-employed borrowers to give them more options.
Fantastic.
Well, make sure I enter. Okay, so interest-only program. I kind of covered this a little bit earlier, Andrew, when we had it on the bullet point, but I'll summarize and go over it one more time. It's helping borrowers minimize that monthly payment, which is huge in this market, to get people into a property and a payment that they feel comfortable with, knowing that they might try and refinance out of the interest rate down the road. More flexibility to offer your borrowers when affordability might be an issue. Again, Fannie and Freddie, unfortunately, do not offer an interest-only product, so this is unique to lenders like us. They allow you that 40-year, non-QM loan products are going to allow that 40-year term, as we mentioned, and the first the 10 years is the interest-only period converted to the 30-year amortization. I'm going to keep it rolling and go into a feature that we really saw used a lot on the earlier part of this year, and I am still seeing it specifically to the investment community, Andrew, and that's delayed financing. When the marketplace was really competitive and sellers had 20, 30, 40 offers on a property, a lot of people were buying in cash, or in some cases hard money, just to be able to move quickly and secure the property, and then would come back to try to recuperate their cash through a delayed financing loan. We still see some of that going on the investment side, because sometimes those properties need to move and sell quickly. So what this program does is it allows you to win that bid in a competitive market, or on a competitive property, we should say. If your borrower pays with cash, or if they use a hard money loan to purchase the property, they can recuperate the cash that they used or pay off the hard money lender through the delayed financing option. And they can do that as quickly as 1 day after they closed on the initial purchase of the property, as long as it's within 6 months, but it can be as soon as 1 day. And this program is available across all of our programs. So you can apply a delayed financing situation to a bank statement program. You can apply a delayed financing situation to a investor cash flow DSCR, or even on a 1-year tax return.
Fantastic. We just got a question from Rocio Woods. What is the qualification payment based? Okay, I'm saying this wrong. What is the qualification payment based on for the interest-only loan product?
Great question. So for qualification purposes, we are using the fully amortized payment. They're going to get the benefit, obviously, of making the lower interest-only payment, but the borrower does need to qualify with the fully amortized payment.
Fantastic. All right, that's it for our questions right now.
Cool. So let's talk about, how do you market to self-employed borrowers? How do you find some of these loans, right? Become an expert in offering these non-QM solutions for your self-employed borrowers. Well, first, ask a non-QM leader in the market to help come and present on your behalf. Lenders like us obviously have a number of account executives out in the field. Reach out to them. I do it all the time. Actually, just did one yesterday. Went out, we did it in a title company. We invited, the loan officer invited a bunch of realtors, had a really good turnout. And we went out there and we did a presentation on non-QM products and programs and how they work. And it was awesome, Andrew. Realtors a lot of times are not as familiar with these products and programs. So when they hear about bank statement loans, debt service ratio loans, and all the different options we offer that are outside of the standard, DULP, FHA box, the light bulbs really go off for them. And they become really engaged. So I always like to say, use the non-QM products and programs if you're a loan originator to kind of get your foot in the door and get everybody's attention when you're presenting to referral sources. And you're going to get the agency, FHA, standard DULP business anyway. The other thing is, see if there are any unbranded flyers out there that your lender will allow to use. So for example, at Angel Oak, we have an entire suite of marketing products where anybody that's an approved broker with us can log in, go into the marketing portal, and you can literally customize any one of 20 different flyers that we offer. that you can slap your logo on them, you can slap your picture on them, obviously all of your contact information, even your own compliance down at the bottom. But it's going to have all of the data and the information from these products and programs, and you can paint the town or paint social media with them to spread the word. We offer PowerPoint presentations, just like the one we're using right now, where it would be 100% customized. Instead of the Angel Oak logo down here, you would have your logo on there on every single slide, and it's already pre-done, so you can kind of just work with it, learn it, edit it, and use it for your presentation. We have a number of social media posts, including some stick figure videos that are really cool, that are all designed for you to be able to quickly put out a post, whether you're making a post to borrowers and buyers, or if you're making a post to self-employed borrowers specifically, or even realtors and referral sources. So there's a lot of different options that we offer to our loan originator community that's approved with us. Reach out and see if whichever lender you're going to work with, if there's any information like that that you can use. And then inquire about other resources to help create a new sector to your business. You know, there's a number of different resources that you can tap into when you're looking for self-employed borrowers. It could be CPAs, it could be divorce attorneys, it could be, you know, any type of attorney for that matter. Really just maybe talking to, you know, your local, your regular local weekend spot, restaurant owner, etc. What we find is that self-employed borrowers know a lot of self-employed borrowers. It's a pretty tight community. And once you kind of get your foot in the door with them, you can really just kind of grow your network from there.
So I've had the pleasure of interviewing a lot of Angel Oak's top non-QM brokers, and I've got a lot of great information. And you know, they literally just, you know, when they first started, they just started going to the businesses that they go to all the time, and they wouldn't necessarily, they weren't the kind of people that would go and say, hey everyone, I do mortgages, which probably should, but they felt actually when they had something specific, like a niche, like they work on business owners, the dry cleaner that they go to, you know, that's someone I could say, hey, listen, you know, we just started offering programs specifically for business owners like you. I'd love to just talk to you about it. It's a much better conversation saying, hey, can we help you actually refinance, or can we help you buy real estate? It's so much better. So your dry cleaners, your delicatessens, your restaurants, your dance studios, all these places that you're doing business. By the way, that's my 5. I started writing down my 5 people that I would be contacting if I was one of you brokers out there and had access to awesome products like this.
Yep, absolutely. There's so many resources out there. If you don't mind, Andrew, what I'd like to do is, you mentioned it earlier, but I'm going to sneak in a plug here, and I'd really like to show how would you get some pricing? How would you get some rates on these products and programs? So are you able to see the quick quote there?
Yes. Can you also show them the marketing resources too?
Absolutely. Yeah. So
yeah. So this is cool stuff. This is definitely cool stuff that you can use tomorrow. Sorry.
We really, no, I'm sorry. We really like to make it as easy as possible for everybody to use our resources. So right here on our homepage, angeloakms.com, you can come right to the non-QM quick quote. And what you're going to notice here is that you don't need credentials. You don't have to have credentials to come in and price out a loan. Anybody could come in here and price out a scenario. And it's as simple as plugging in the information. So I'm going to say we have $1 million loan here with a 780 credit score. Just going fast here, I'll choose a 70% LTV, housing history clean, single family residence, purchase transaction. You know, we're talking about self-employed borrowers today. So let's say this is a 24 months business bank statement program, primary residence. You'll notice right at the bottom of the screen here, and you can even, by the way, input your compensation. So if you are an approved broker with us and you know what your lender paid comp plan is, you can throw it in there. For example purposes, we'll leave this as borrower paid, but you can see right here at the bottom, your rate comes up. We're telling you here, you requested a 70 LTV. The program does go up to 80. Your rate on this particular situation is a 775 as of today. And it's giving you some brief guidelines, 24-month seasoning on bankruptcy, 24-month seasoning for a housing event, 6 months reserves required. And this is based on a 30-day lock. So it's really cool. You know, if you wanted an interest-only feature, here you go, 40 years, boom, 7.99 interest-only feature applied. So everything is right there at your fingertips, including some information. And then for those that are approved, well, you don't need to be approved to submit a pre-qual. So if you wanted to move forward and say, I want to send this in and have my income calculated by Angel Oak and get a pre-approval, you would simply come in here and select your interest rate. And that'll take you to step 2, where you can drag and drop your 3.4 file if you have it ready. If you don't, hit the next button and then come into this last page where you're going to just fill out some information about yourself, your company, your NMLS ID number, etc. And check out these boxes here at the bottom. You can literally drag and drop your 1003, your credit, this bank statement bucket. You can drag and drop all 24 months bank statements, hit submit, boom, that's off to your account executive. Your AE is going to get that instantly. And with a click of the button, I can have that up into my bank statement review desk, and they're calculating the income for us, which we'll have back to you, hopefully with a full pre-approval within 24 hours. It's that easy. You mentioned the marketing piece, right, Andrew?
Yes, please.
Yeah, let's talk
And by the way, if you want to play with that quick quote tool, I mean, really, I'll get. This is how I started to understand actually the power of these programs. I just dropped the link to the quick quote tool, quick quote tool in the chat box, so you have that. And Marjorie wants to know: is this available for DACA borrowers?
DACA, unfortunately, we don't lend on. We do lend on non-permanent resident aliens. DACA is one that we don't lend on. But again, other lenders like us in the space probably will have a home for that.
Fantastic. All right. And by the way, I got a couple of questions here that I'm thinking of the top question, but it's not over yet. So keep those questions coming in.
Yeah, we still have a little bit of time. So back here, if flipping through this, just kind of show the ease of use. Let's say you wanted to do a DSCR, investor cash flow. Change it to that program. Oh, no qualifying rates, but that's because we have this as a primary. So we flip it to investment, and there we go. Pricing is showing down at the bottom. This is on $1 million loan amount, so a jumbo 780 credit score, 70% loan to value on the debt service ratio program. So you see your pricing is there. So it's that easy to use, guys. It's literally just selecting your drop down here, and that'll change your pricing and your information down at the bottom. Okay. Fantastic. Now, talking about those marketing tools, and I really love to show this, even for our approved brokers, Andrew. The saying I have for this, it's the most underutilized tool in the game. So you do need credentials to log into this portal to access the marketing tools. You do need to be an approved broker, but that's, just reach out to us and we'll get you set up. But you'll come here to the marketing portal. Oh, let me just log out. I logged in under the wrong credential. Bear with me 1 second. Here we go. And I'll use a live example here for one that we just recently did, presentation I mentioned to you guys that we did for realtors. So here we go, marketing portal. So I'll start with the flyers down here at the bottom. You guys can see there's a number of different flyers for each program we offer: asset qualifier, one just to realtors, bank statements, foreign nationals, etc.
Hey, Scott, don't be shy. Click on that bank statement one. Let's see that bad boy.
Absolutely. Let's pop that one up. Okay, so we pop up the bank statement flyer, and as you can see, it's 100% customizable, and it's so easy. You're just simply going to pop in your information here on the left-hand side.
But I don't see Angel Oak's information on there.
None. Angel Oak's information is nowhere to be found. You're going to click on this left logo button. And upload your logo, which will come up right here on the left side. Right logo button would pop up here on the right. Photo would pop up down here on the bottom. So another cool feature, if you look at the different options there, is if you ever wanted to co-brand, let's say with a realtor or referral source, you can do that. You can have the information for yourself as well as your realtor, and both pictures on here as well. And then once I download it, it's going to generate this flyer with all of that information on there. And then from there, it's just saving it to your desktop and going to work with it. It's that simple. Come back over here and let's look at the social media posts. So here's every program, asset qualifier program with a number of different images. And then here's a little, text we put together to say, hey, if you want to put a little post out geared towards realtors, copy paste here. Geared towards borrowers, copy paste here. Bank statement program, same thing. Bank statement towards realtors, cash out refis, investor cash flow. Super cool. I mean, literally with just a click of 3 or 4 buttons and a copy paste, you can have a beautiful post up where you're advertising these products and programs to your network. Go back here, let's go to the whiteboard videos. So your whiteboard videos here, these are really cool videos. I don't want to click on one because they do take up a lot of bandwidth, Andrew, and I don't want my connection to go down. But everybody's probably seen these little stick figure videos. They're used by a lot of people out there, but the cool thing about it is it's going to be short. It's going to be about a minute to a minute and a half. It's going to tell all about that particular product or program. It's no mention of Angel Oak anywhere there. Again, no Angel Oak branding. It's strictly going to be you as an originator advertising this particular product or program to your referral source or even to the general public. And these you can slap on your social media. You can put them on your YouTube page, on your website, wherever you like. So again, I think this is really underutilized. Last but not least, presentations. So as I mentioned, we have the PowerPoint presentations. This is where you'll find them. We also have an event flyer here. So live example, the one I mentioned I did yesterday with a loan originator, he took this exact flyer here. He customized this flyer with his information, obviously the information for the date and time of the event and his logo. And he sent this out to his entire database of realtors. And we were able to fill up a room at a title company with realtors and present these products and programs. And then what he did was he used this PowerPoint presentation here, opened it up. Let me see if it opens up for us here.
Hey, Scott, just say were there a lot of attendees for that event?
Yeah, we had I think it was up 13, total of 13 realtors that came in.
Okay,
so I mean, it was great it was a win for the loan officer, it was a win for me, it was a win for the title company, and it was a win for the realtors because
realtors.
Everybody walked out of there with so much valuable information. Everybody got a little bit of value out of it. And the tools are all here for you guys to put that stuff together. So again, to summarize, I think it's the most underutilized tool in the game is the marketing tools that we offer here. And I'm sure other lenders like us offer as well.
It's great.
Mm-hmm.
Fantastic.
And with that, I'll bring us back over here to our closing screen.
All right. And just listen, by show of hands, if you've written down, 1 to 5 people on that sheet of paper or that document, raise your hand. So use that little thing, raising your hand. Let's see how many people are going to be ready to leave this webinar armed with potential to do business. We've got already 7, 8, 9, 10, 11, 12, 13, 14, 15 people, 15 times 5, what's that, 60? Something like that. It's so we have there's a lot of business ready to be helped, a lot of self-employed borrowers ready to be helped, business ready to be done. Thank you, Scott. Appreciate it.
And that's awesome.
So this is your last chance to get in questions. I'm going to close out the questions portion in 30 seconds. If no one has any other questions, the last chance to win one of these awesome Angel Oak t-shirts. We've got Eddie won one, Sarita won one, and then we have one going to the best question. And I'm gonna look at see what we have up on the screen and what we have so far. I don't know if you have a favorite, but I know I definitely do. So I see the one I'm going towards, I'm leaning towards, but I'm gonna leave it open for another 10 seconds if anyone has any other questions that they want to bring. Okay, 5, 4, 3, 2, 1. Okay, and the winner. I really like Nancy's question. I don't like Nancy's situation. And I feel bad about Nancy's situation. She's the one that's in Los Angeles County dealing with the ban on evictions. So just for the troubles that you're going through, you get a free t-shirt. So
I was thinking the same, Andrew. I was going there too. Nancy's question was the one I was thinking.
Fantastic. So that's it. That concludes our webinar. So Scott, anything you want to say in closing, impart some wisdom, give our attendees, some kind of next action steps that they could take, maybe has to do with their 5 prospects that they wrote down.
Absolutely. Look, in closing, we're all in this industry together. And obviously we all know where we're at today in this industry, right? A lot different than it was 6 months ago. I really believe as mortgage professionals, real estate professionals, we need to stick together. We need to share information like we did today. We need to help add value to each other because knowledge is power. And getting a lot of this knowledge out there to the realtor community and the borrower community is going to help our industry overall as a whole. So I thank you for having me here, Andrew. It's always a pleasure to be able to just share that information and add a little bit of value to anybody out there. Please take action on this. Save the pricing engine to your desktop. If you're an approved broker with us, get on there onto that marketing portal, prepare your flyers today and start marketing and shooting them out. You have literally 0 to lose because that information is free to you. And if you're not an approved broker, please reach out to your local AE and we'll get you set up so you can have access to these products and programs.
Fantastic. Scott, thank you so much. Appreciate it. And we love actually the support we get from Angel Oak, allows us to kind of help brokers like you do more business out there. Hopefully you got some good tips here. I know for me, actually, if I was a broker out there, I would be, leveraging the heck out of Angel Oak's marketing tools to do my own seminars. If you can do seminars and provide value to your referral partners, like your real estate agents, and because they're always looking to do seminars. And if you can give them something to actually talk about, I think that's a great thing. So Scott, thank you so much. And everyone who participated, thank you for your questions. Thank you for your feedback. Really appreciate it. Enjoy the rest of your Thursday. Hope October is going good for you. Take care.